Today we have a very special guest joining us, Miranda Werstiuk. Miranda is the Director of Corporate Development at OCIM Precious Metals, and she's a corporate finance and investment banking professional with 25 years of global experience in the resource finance sector. She's been involved in transactions covering the junior, mid-tier, and senior exploration market, as well as development and producing companies, technology companies, everything you can think of in the mining space, with a total transaction of over 165 million Canadian. Miranda discusses with us tonight her unique path to entering the industry, making the finance structure of mining projects work, and that one time she got muted by a helicopter pilot on one of her mining adventures. Thanks again, Miranda, for joining us on The Rocks. Let's dive in. Miranda, so excited to have you here. I want to hear first what you're drinking tonight, and then I'll tell you about drinking.
Tonight is a low key, low test night here in Toronto. It probably should be more fruity and vibrant because it's pouring rain outside. But it's straight old vodka soda, just your basic vodka soda with lemon. Easy, simple, not complex, no umbrellas, no pieces of well, no
kind of vodka.
Yeah, no large pieces of fruit, just small.
Well, I'm having, I don't know if you've ever had this Basil Hayden Caribbean rye bourbon. It's bourbon finished with rum, so it tastes like the Caribbean. It really does. Like a friend of mine said, it tastes like vacation. So I'm drinking that in honor of how I first met you, which is while you were here in Florida on vacation.
That's right.
You headed out on cruise, right?
Yes, yeah. That was a great day. We, my friend Lena and I had rolled down into Miami for a cruise, and our mutual friend Ian here in Toronto had connected us, and Lena and I were staying in South Beach, and Emily, do you mind coming down for lunch? And you were all dressed up so nicely, and we sashayed into the restaurant in like flip flops and a cover up.
That's what it's about.
And we ended up talking for like 3 hours. Like it was this extendo lunch, which was fantastic. I that day very, very well because it kind of kicked off our it was kind of a women in mining cruise to the Bahamas, which was brilliant. I think it should be an annual event. Anyway, it was that's very good, and that's very appropriate because it was May, it was really hot, and we were like impeccably dressed, and we were just in our summer gear.
Well, I was impeccably dressed for Florida, which
yeah.
Well, cheers to that.
Cheers to that. Cheers to that.
Yeah. And I thought it would be fun today to kick off by asking you, like, how did you get into mining? Because you are not a geologist, which I think everybody expects that to be in mining, you have to be a geologist, right?
Right.
That's not how you got into this crazy industry.
No, so I've been around for a long time. I started in the industry in 1994. My background actually is a biologist, a biology degree, an anthropology degree, and then business on top of that. So I would say when I started, that was quirky and anomalous. But as we have seen the industry evolve over the last couple of decades, having an understanding and appreciation of the environment, not that geologists don't, but, I've done field work that's similar to you, but not with rocks, but with living organisms and living ecosystems. So having that appreciation of environment, impact of mining on environment, and then you roll into it anthropology, which is the study of culture and man. Mining, as we move forward into different environments, different countries, different ecosystems, we're impacting human cultures. And so how do we manage our growth into these areas, into these places without coming in and as people I think typically believe is that come in and you just take over, right? Yeah. But as you know, the industry has changed so substantially in terms of environment, social governance, community, stakeholder engagement, all these really amazing pieces that have always been there, but now are much more prescient and highlighted as we move forward. Yeah, so I graduated my second degree in 1992, and my dad was like, okay, you need to get a job. So we no more degrees, please, currently, which was funny because, both my parents have PhDs. So I sort of stepped into downtown Toronto, not really knowing where I wanted to be or what I wanted to do. And I happened to come across a small boutique investment bank here in Toronto that was founded in 1989. And I walked in, I was hired on a short-term contract, essentially to be a research assistant, the right arm, eventually of one of the co-founders, the EVP. And it was small. I mean, there was, I think, 5 people at the time. It was, before email. So everything was old fax machines and copiers and fax paper that would implode if you didn't store it properly. I mean, it was when dinosaurs roamed the earth and we were chipping out, notes on stone tablets with chisels and hammers. But it was very, I mean, the core business philosophy was still there, but trying to do business was, working on transactions. You didn't email a term sheet to somebody, or get on a call like this. It was, my EVP in Europe faxing term sheets and subscription agreements. And then you'd wait. And then an hour later, it'd all come back. And then you'd have to fax back the sign. Like it was so much more prolonged and cumbersome, but deals got done. And a lot of deals got done. So they hired me. They hired me on a 3-month contract. And said, look, we've got somebody coming back in 3 months. So we'll see. And I guess, I proved it was smart. I was eager to learn. I could do the job. And I was, very good with people. Right. Mm-hmm. So that started my path into the mining business. And through that private investment bank, I just sort of moved up the I hate to say corporate ladder because it was there was only ever at the maximum 12 of us. It wasn't a big firm, but I worked hard and I worked my way through the ranks. And when I moved on last year, I was an executive vice president, focusing on institutional sales and investment banking, really. So really good learning on the job, like hands-on in the trenches, in the dirt, no pun intended, learning because we were a small firm. I laugh because one of the funny things was we had people thought we were a lot bigger for a lot like a Merrill Lynch or a GMP here in Toronto or one of those big investment houses. And you'd get a call saying, can I have your syndication department, please?
I am the syndication department.
Can you just hold for a moment, please? And put the person on hold and then, hi, can I help you? So it was, people, we made a big impact for a very small firm. And we really carved out our niche in funding early stage exploration. And during the 90s, sort of right up until 3X, really, we were doing a couple of deals a month. And it was just turning over. People would come in. I remember people just handing me checks for subscriptions into private placements for mining companies, and you go back 2 decades, and the regulatory and compliance structure around participating in private placements was just you're an accredited investor, and that meant you could put your minimum investment was $150,000, right? Mm-hmm. And it was pretty much as simple as that. and then you fast forward over the last 20 years. Deals happened that shouldn't have happened. a lot of money was made, but a lot of money was lost. And so around the regulatory structure of exempt market dealers, because we worked on non-prospectus offerings, there was a lot of structure and compliance put around those transactions, right? So relationship disclosure, know your client, know your product, who are you selling to? Do they understand the risk? So, I mean, there was a lot of learning. It's been a lot. And look, I think you go into your each and every day with your sort of, or my vision is that I learn something every day, right? So all that learning on compliance and regulation, I mean, it was just a natural evolution, I think, of the business, but it was also very good learning for all of us who were in the trenches, the nitty gritty and nuts and bolts of, as I say, raising money for really scrappy and resilient junior companies who had vision, strategy, and the potential to become something much bigger, right? So that's how I started. And I spent 26 years at that firm. Right. And so, I grew up there. I learned the ins and the outs and the upside downs of the business on it at that firm. So, I'm grateful for that opportunity. Because I think, and there's, like I said, pros and cons between big and small firms, but, being right in at the ground level it was eye-opening, mind-boggling and terrifying at the same time. So,
what you did there was really unique in the industry for people who maybe aren't familiar with how mining gets funded and financed. I mean, you really did specialize in early stage projects, which is there aren't a lot of groups out there that do that, right? I mean, that was a unique experience and niche for you to be in.
It was, absolutely. And as we evolved through the global financial crisis and sort of the constraints around the type of firm I worked for were pulled in, things were tightened. Not very many of those firms exist anymore here in Toronto, right? They are few and far between. And of course, here in Canada, we had the cannabis wave come through, which pulled money out of the junior resource sector because your returns were faster, they were more intense. When you invest, exploration to building a mine is often more than 10 years, 12, 15 years, right? So with the wave of cannabis investment, it was fast. It was like, we can make a lot of money very quickly. But then we also know those waves crash. And when they do, they can crash particularly hard, right? So, but you're right. We really, the firm really carved out a very specific niche of early, like we would look at stuff that was, just maybe some initial surveys, some initial trenching, sampling. There may not have even been a drill hole on the project yet, but potential, you're in the right district, the geology, they believe, in the absence of hard data, you're located, 10 kilometers or 8 kilometers from Red Lake, or you're in Timmins, or you're in the Abitibi, you were staking property in very well-known mining jurisdictions with lots of historical production. So, we worked hard and it was busy until Bre-X, really.
Yeah. And it's because of Bre-X that we have my favorite document, right? The NI 43-101.
Yeah, because when you look at those old press releases, it's funny to go back to look at, proven, probable, and possible, right? All these categories. Well, I think those could be reserves. Maybe
I've got a good feeling about this.
I've got a good feeling about it, right? And so the 43-101 and the shift, driven by also the Canadian Institute of Mining, all these pieces coming together to really put some good technical structure around what are we looking at, how do we quantify it, right? And I think they, as they took a look at JORC and they took a look at other structures around the world to say, like, how can we actually I don't know if you could ever prevent 100% from these things happening, because they happen sort of here, there, and everywhere. These kind of blips in in the industry, but by and large, I mean, the 43101 really is the cornerstone. I mean, it's the cornerstone of any company's moving forward, right? As you've put together a prospector. I mean, it gives you that first step to be able to understand and assess a project. Yeah.
So how does that change for you, or how did that change for you, how you looked and evaluated projects from kind of before all of that structure and process to now, and also where you're now looking at projects that are further along in the development cycle, right? Right now you focus more on development.
Near production. So development right on the cusp of production and producing assets. And by producing, it can be, trial mining, bulk sample. It doesn't have to be full scale, commercial production, right. But anywhere where there is gold coming out of the ground. And I think, the industry, and it was interesting. I had a call with a company this morning in Australia, and we had a long discussion about the cycle that companies get on of raising money, drilling, raising more money, drill, because somewhere at the end of that path, hopefully, you are going to have an exit, which you get bought out. You're going to hit, the next, gold strike. You're going to hit the big, 10 million ounce plus deposit. But I think there's huge value, and we looking at is that these projects who spent let's say $20 million on drilling or a nice a tight budget, but then say, look, we've got an opportunity here to move this project into production. We can generate some value. We can generate cash flow for the company, and then we can take some of that, reinvest it in the company for exploration. But at least you're producing ultimately revenue, right? And I think there's something to be said, because there's lots of projects out there that will just, and you've seen them, that will just drill, and with the hope, and I'm not trying to diss any, because there's a lot of good work that's done by each and every single resource company, but at some point, are you going to continue to raise, put hundreds and hundreds of millions of dollars into these projects, and where is that going to get you? Like, if your vision is to continue to drill on those projects, why not, take a look at, and we talked about this, these projects who have mills on site already that are fully permitted, that have ore stockpiled from previous operations above ground and underground, and they're ready to go. And it maybe is, simplistically, taking a look at the ore piles, understanding the metal, like, what do you need to do at a likely lower cost, and then you start producing, right? You understand what kind of process you need, your flow sheet, and the ore is there, right? So I think there's huge value in those kinds of operations, and I think what we're looking at is these smaller scale. You don't have to be producing 300,000 ounces a year, right? You can have impact for the company and for your shareholders by taking a look and say, look, we're going to produce, I think our target's 20,000 ounces a year, right? And there are savvy ways to finance that, whether that's, a bit of equity, a bit of debt, a strategic partner, gold, there's gold loans, there's multiple, there are options out there. Because, in the early stages, because you don't have that capacity, your timeline to production is far, far away. So you are tied to equity, right? So you're tied to raising equity, or unless you have a strategic partner who can help you fund that, which is fantastic. But, I think if you have an opportunity, and to turn the switch on and efficiently and cost effectively go start producing, then I think that's a good plan. And you and I have talked about that, right? So start getting these things moving, because then you can, that small scale operation, you can just start working the bugs out. You're working the bugs out, getting it moving, and then you have the ability to grow those operations, right? And then you have a parallel approach of building out your resource and your reserves, and you're producing, right? So it's a good risk mitigation strategy too, right? So
it balances it out. And that's, I mean, having both of us sat through 3 weeks of virtual mining conferences, right, over the last 3 weeks.
Yeah.
Clear as day that companies really, they definitely look to add value as a mining company by one of two ways: either drilling and adding value by adding ounces, right? Yes. Drill more so you can say that you have more of whatever metal it is that you want to mine, or add value by going into production and having cash flow, right? Yeah. And those are two very different approaches, typically led by two very different kinds of management teams. Right?
Exactly.
Two very different exit plans. The folks that want to drill, they're probably looking to get bought out by a bigger company down the road. Whereas the ones that want to go into production want to run a mine usually,
exactly.
Right? So
and the ones that want to run understand that there will be a shift, obviously in people, because again, the exploration skill set is very different from the development and the mining skill set. But if you go in with that strategy and vision that we're going to move this into production, then your approach is different, right? Yeah. As you said, there's two very different approaches, and there seems to be lately, and we also talked about this, that there are a lot of people, a lot of companies, we're adding value by adding ounces, right? That's how we see building value. And I mean, you can take a look at the TSV, XV, and there are companies there that people have come to me, and I'm not focused on that space anymore, but people trying to understand, well, why do certain exploration companies who may or may not have a 43-101 yet have such high market value ascribed to them today, right? And then that begs the question, so where do you go from there?
Right.
So how do you add? Okay, so you've added, this amount of value. How do you go from that to that when your value, arguably, you could be, at this point, overvalued when you look at your comparables. So how do you continue to add value? And then that speaks to, we're building ounces because we are going to be bought out. Right. Like that's our strategies, that we're going to be bought out. Right. So, it's interesting. It's certainly interesting to watch. And yes, we've sat through 3 weeks of meetings, and listening to, very capable, people, talking about what they're doing and their passion for the business, which is always amazing. But, when we've both seen companies, well, you've got this piece, the production piece, already there. So why not take
plug it in?
Why not turn the switch on and build additional value by saying, look, we can do this. We've outlined a resource. We're going to allocate some of the money we've raised, but we're going to take another piece of equity and some other modular structure to move this forward, right? And start just generating some cash flow and building value that way, right? Because, it takes time. You got to, it's not just as simple as turning the switch on and going, yay, here we go. Here we go.
Gold bars flying everywhere. Yeah.
Yeah. It's like gold bars everywhere. Pot of gold at the end of the rainbow. We turned the switch on yesterday. We all know it doesn't happen that way. And there's a lot of intelligence and science and sheer hard work and brute force to get these things to move, right? So it's been an interesting 3 weeks, that's for sure, right? Getting through those presentations, because it's mining is it's people just don't understand, I think, sometimes that if you don't grow it, you have to mine it, right? So the chairs we're sitting on, the computers we're on, the pen, it all comes from the earth, right? And of course, now we have to really understand: are we doing it in a sustainable, responsible manner? Are we understanding the environments we're working in? Are we understanding the people we're working with, the communities? What's the broader ripple effect on women, on children, on economics, on social structure, on culture, all those pieces. So a much more holistic approach into how do we build the projects that that are going to succeed, and what do they look like?
Well, and if you were to put your anthropologist hat on and look at the mining industry, right? I would be interested to know what kind of observations you would make about the different groups inside the industry. Like, if you were to,
and it's really interesting because I'm going to be participating in a course in January as a guest speaker on leadership, right? And so really, when you start looking at the anthropology of leadership, right? So businesses are cultures, right? So and they have their own belief systems and their hierarchies, and they have their alpha males and their alpha females, and they have the pods that go together and the pods that don't go together. So when you start laying in sort of your fundamental theory of human culture and social interaction and hierarchy, the mining industry, you could probably write a million theses until the next century, because it's. I always thought, I never envisioned myself to be in the business for so long, right? But the people that I know in the industry who have been here for a long time and are passionate about it, are committed to it, are really good, bright people with a touch of, I'd hate to say insanity, but but are really resilient, brilliant, funny, smart people who really want to build good businesses, right? And I look at other friends of mine who work in industries, and it's nothing like the mining business, and the opportunities you have to get involved with good people, good projects, the opportunity to see things around the world that most people don't get to see, the experiences like you've had, like I've had around the world. Those are, I'm thankful and grateful every day to have been able to do that. And then to take a step back and say, the funds we're raising, how does this help evolve this project? How does it help people? The discussion about, the sustainable development goals for projects, put forth by the United Nations, to a bigger ripple on that. The work that the Planet Gold Program is doing, the United Nations, all about artisanal mining and sustainable mining, and the Craft Code and the World Gold Council's responsible gold, all these pieces that fit together as we've continued to push forward on developing the industry. But from an anthropological perspective, I think if you dial back 100 years and stuck, your hardcore anthropologists into the business, they'd be like,
whoa. I always think like, a party at a mining conference is like walking into the Star Wars bar.
They'd be standing at the doorway, just kind of looking like this, going, I am out of here, right? But when you look at it, though, and you've been to it, and we've all been doing it for those events, that's where business gets done. Because look, we all have to, you have to sit at meetings, you have to meet people, you have to sit across the boardroom table, but when you kind of just take a little bit of a step back and have just basic conversations with people, that's when you find out, the nuances and the idiosyncrasies and how to actually make projects work, how to make the financing structure work, But it's interesting that I think Xerox was one of the first companies to put an anthropologist in place, right? As a big corporate entity. And the information, because anthropologists are meant just to be observers with no impact. But of course, you can't put yourself as an observer and not have impact, right? So there's always going to be, you're always going to leave, there's always going to be a footprint, right? You're always going to have some sort of effect. But when you read about, it's interesting to see, the studies that they pulled out of Xerox in the 70s was like, every big business should be hiring anthropologists to help people understand the culture and the systems and the hierarchy. And I would hazard a guess that, if you put anthropologists into any mining company, and it may not necessarily have to be full time, but just to provide guidance around the own internal structure and systems. But how do you go and when you're building a project, let's say in East Africa, how do you understand what those communities want and what they need? And how do you not go in and step all over people because our way is the right way, and that doesn't hold water anymore. Nor should it have in the first place, right? But when you take a step back and just doing reading about the culture of anthropology and anthropology and leadership, and it's absolutely fascinating, because I am sure I could when I retire, whenever that is, a pretty interesting master's or PhD thesis about culture and the mining industry. Right. I think,
zero in on the people that still wear bolo ties. Right. I would like to understand that specific section of our industry. I mean, I think they always, because they want to show off the nuggets, right? They always have the gold nugget bolo tie.
But that's what makes it brilliant. So think about walking through the Royal York Hotel in Toronto, like on the Monday night of PDAC, and it is crammed with humanity. And just think of all the people that have come out from all over the world, and you can just sit in the lobby and just
with all of them.
Because you have a common thread. There is a common thread that ties each and every one of us. But and you got to love the guys, the prospectors here in Canada who come like right out of the bush. Like I mean, they have walked out of the bush from the Yukon onto a plane into PDAC, and they're ready to do business. And then you have, people walking in off Bay Street or the city or Wall Street, just here I am, let's and bring people together, which I think is absolutely brilliant. But yes, I think I should, given my training and doing some sort of PhD, a doctoral thesis on what I would be absolutely fascinating. Like, it would be absolutely fascinating.
And I think it actually goes back to what you were mentioning before about you have these companies that are so focused on drilling and adding value by drilling. And I would make the generalization that most of the companies that have that approach are led by geologists.
Yes.
I will put that out there into the universe. And most of the companies that are trying to get into production are led by either engineers or more business focused people from a business background. And I think kind of difference in cultures really influences the strategy that a company takes. And they are very, very different.
Oh, absolutely. For example, the group I talked to this morning from Australia is looking to start small scale production in Q1 2021, and it's run by a gentleman who's economics, finance, and he has, I think, a little a bit of technical, but he's a economics and finance and business guy, right? So what is the best path to add value, to drive cash flow and revenue into the business, and so we can give back to our shareholders. Like, how do we get to that path the quickest, right? And you're right, and we're going to drill and drill and drill and drill. I maybe, geologists, it's rocks, and we love the rocks.
Of the ore body.
Yeah.
As a geologist, I get it. I totally get it, but I'm just self-aware that you can never get a geologist to say we've had enough drilling. No enough. Yeah. That will never happen.
No, and look, and as you said, there are two very different strategies on adding value, right? And I personally, and this is, based on, what I'm doing now, I'd like to see more of those, those opportunities where the pieces are there to start production, right? And like I said, it doesn't have to be massive. You don't have to be producing 150,000 ounces a year, but start moving towards that and get those pieces going, because you can still follow this. You can still add to the resource and add to that, but why not get this other piece moving, right? Yeah, totally.
I've heard a lot of companies say, we're not mine builders, right? We don't have the right skill sets to build a mine. And I put back on that a little bit and said, well, why can't you hire a team that can come in and do that, right? I mean, it seems a little bit unique to the mining industry that there's this concept that the company is the management team.
Right.
As opposed to you have a company that owns an asset that's run by a management team, and that team may have to change as the asset moves along or as the strategy changes. You can bring in people that know how to do that. And I think part of it is people market mining companies so much on the strength of the management team. And if they don't have anybody on the team that's built a mine, then our strategy can't be to build a mine. And it seems a little too rigid for where the market is right now.
Oh, no, I agree. And I think the best companies really are those ones that say, look, we've had a very sound and successful a series of exploration programs. We're moving to development. And they know that they're going to have to shift their management teams, because the guy that discovered the project isn't necessarily going to be the guy that puts it into production, because you're going to have to bring in the engineers, metallurgists. There's a whole different skill set needed to shift, to move, to evolve that project. But and I've seen it too, that, well, we don't have those people. So we're going to continue on this path rather than we have an opportunity. Go finding the people. And there's I mean, the industry is filled with a brilliant, bright, capable people. So why not get those people and use them and move some of those projects forward, right?
Those types of skill sets earlier, then those projects may move a little faster, because you've got that diversity of thought sitting around the table, right? With some different ideas on how you could move cash flow up. As opposed to
just continuing, your exploration programs. Right? No, I agreed, and get, I was talking to a company, who as soon as they could, in their evolution, they got, a handle on metallurgy. They got those pieces lined up sooner rather than later, right? So because they could see an opportunity, whether we've got possibility for a nice initial starter pit, we can get that moving, but we're still going to evolve our underground operations, because we know there's potential there, right? So there's so many ways to move it, but you're right, get the right people talking and analyzing and studying earlier, so as you move that project forward, you understand, you have a much better handle of what's going on. Yep.
So if you put your finance and banking hat on, taking off your anthropology hat, putting on your money hat, how would you look at, or how should the market look at a company's market cap and other statistics if they're going into production and adding value that way, as opposed to adding ounces? How do you think those numbers should shift depending on the strategy?
Well, it's interesting. There are companies out there who are in exploration and have market caps that one would think would be associated with a producer, right? Yeah. And then you have producers who have come in under budget in terms of funding and timeline, right? Who are valued less than those exploration companies and are successfully producing gold at a low cost, but still the recognition in the market is not that of those higher valued exploration companies, which I find that I have always found that to be a disconnect, because if you've come through under budget and in a shorter timeline than you originally estimated, and you're actually producing gold and you're selling it and you're generating you're making money. Why is your market cap, let's say for one of the producers, is 125 million, yet you've got explorers whose market cap is 300, 400, 500 million? So, I mean, how do you compare? They're two very different companies. And so, but you would think that the value here, because of what they've achieved, should be higher, right? And I think people love the business that was built on getting in early and driving the value of that stock, and the typical discovery curve, right? So you've got exploration, you got discovery, you've got the buildup, value creation, and then you've got this sort of tapering off as you're in your development, and then construction, because you're expending a lot of money, and then it ramps off, right? But there seems to be a huge, on this early end in that exploration phase, so much emphasis on the value and created, and the eyeballs and the marketing and the constant putting it out and just driving the market value of those companies. When I think companies get left behind, they get left behind. The companies who are doing very good work get left behind.
But I think of this company is almost like ATMs. Like they're literally printing money, right? I mean, they're undervalued, but they're making money. I mean, it's as opposed to, it brings to mind that phrase, a bird in the hand is worth two in the bush, right? Well, you could have a gold bar in your hands, or you can have two in the ground. Which would you rather have, right? Maybe it's personal preference to hold it.
And maybe that's the mentality of this focus on exploration. So and here in Toronto, it's scrappy juniors raising money, driving value through drilling and continuous exploration. Then those really good, lean, efficient producers are lost. They're lost in the shuffle somewhere. And there's so many, and I have these conversations with people here. There's so many of these juniors who've just driven huge value with exploration. And where do you go? I mean, and is that, again, that speaks to funds in the ground for exploration, for the vision of we're going to be acquired, right? So again, the adding value by adding ounces, because at some point further down the line, we are going to be acquired, right?
Right. So we've got 3 companies checking us out every week, and they're going to swoop in and take us. And
we've got NDA signed. All these people are looking at us, but as we know, that's never that's not a given, right? Yeah. So, and then you look at those kind of really, then there's, I've been seeing more and more of this because I'm looking at producing companies now who really have moved these projects forward very efficiently and very well, very systematically, logically, using, the resources they have, but also understanding that, we can find synergies and economies of scale, and we've got a project and there's toll milling capacity, right? So we don't have to build a mill on site. We don't have to buy something for X tens of millions of dollars. There are opportunities where we can move this project forward get it producing, and it's not going to cost us $300 million, right?
Yeah.
So, and but everybody, that's part of the business, though. It's everybody get in. You've got these amazing and those companies work hard, right? Everybody works hard. Yeah. So right, we all know that. So, but I think it's, as to your point, it's just how do you, where do you see the company looking to add value, right? And what's the best path, right?
Well, and how I think a lot about when you bring non-traditional mining capital in, right? When you bring in people who don't come from Toronto or Vancouver, and they look at companies differently. And when those family offices, when those non-traditional mining investors come in and look at companies and how they evaluate them, it is different, right? I think they're attracted to different things, and that may change the mining industry as that new capital comes in, fingers crossed, because we need it, right? We need that new source of capital, because they're going to say, why should I give you more money to go drill when we've got a perfectly good asset that we can start making money off of, right?
Right.
I'm a traditional business person.
I agree.
As a mining person who gets it and loves the romance and the excitement of just going out and doing a big drilling program. And maybe getting...
Right. I agree. No, absolutely. Because I've spoken a couple of times in the past about, alternative modalities of financing, because the traditional, when I started, we had a pool of investors, the guys we'd go to every single time. We knew would put in, a chunk for the equity. We had, sub agents in our other respective jurisdictions that we were working, and literally the deal would be done like that. And it was always about equity. And then, people are like, well, so what if I, I've raised a ton of equity, my cap table's a bit flawed, for lack of a better word, but where do I go from here? Like, what kind of creative mechanisms can we use to actually evolve this project? And you're talking, we've seen royalty and streaming and gold options. There's a number of different mechanisms coming into play now where you can actually access non-dilutive capital to really evolve those projects, right? And I think we'll see some more creativity here, and to your point, different people coming in, right? Different groups of people. For example, family offices who've created wealth in and around other hard assets, whether it's manufacturing or
state and
exactly, right. And so those people understand the fundamental value of hard assets, right? So diversifying their investment into the commodity space. But there's sovereign wealth fund. There's all sorts of other
pension funds, right? We're jumping in.
Private equity, which has always been there, but there's smaller firms around that really, tailor their investment. So let's say gold in the Asia Pacific region or gold in North America, right? So some real, very focused, targeted investing. And I think that needs to happen, as you said, because the traditional, here, let's go raise some equity, or, over and over again, I don't know if that's sustainable, really, right? And it's as for example, the firm I worked at, people evolved, the investors moved away, and it was very difficult at times to find other pools of capital. It was hard, right? It was a tough job to look for. Okay, we've gone to the pool of people in Canada, let's say, and at that firm, we did a lot of fundraising in Europe, which was great because it was, very smart, savvy, long-term investors, right? But with a different investment thesis compared to North America, right? And I still have those relationships. Those people I met 25 years ago. Not all of them are around, but that same kind of ethos. Yeah. I mean, we need it. We need it to, if you're talking about, building a better business, you're going to have to access different pools of capital to do it. Right.
Yeah.
So,
Well, now that you brought up traveling to Europe, so you've got to share some of your adventures, or at least one good story of hanging out around the mining industry for all these years.
Okay, so I have two, and the first one, I had an opportunity probably 7 or 8 years ago to go look at a copper project in Slovakia. Right?
I just learned where Slovakia is. No kidding.
Yeah, and it's it was there was a private equity fund who was interested looking at it, large copper assets, big claim block. And I didn't realize that, Slovakia and all the, those Central and Eastern African countries have a significant mining history, right? Mm-hmm. And many times dating back to, Roman and pre-Roman, right? So there's always been a culture and ethos of mining. And so we ended up flying into Vienna, then across, can't remember if it was Belgrade, but we ended up at a town called Propad, which is near the Pole, close-ish to the Polish border in northern Slovakia. And the first day we literally stomped around the property, and in many ways it was showcased to be more than it was, right? So we ended up so all the shafts were all filled in, the adits were all blocked up. It was going to need a lot of work to get back to any kind of state of even putting together an upgraded resource, right? Because it had old Russian resource on it. And fortunately, the mining engineer who knew that property inside out had done the original work 25 years ago. So he was the one that took us across property, and he was brilliant. So, we were in northern Slovakia. Go out, and in Slovakia, you drink Slivovitz, before, during, after dinner. And it was just the kind of the camaraderie around mining was really interesting. And there was an old mining museum near one of the small towns, and it really honored the miners that went before. So there was a statue of a miner with an old headlamp and a pick, and it said Darbo, which is God be with you, right? So that was really interesting. Because we grew up here, mining is part of the fabric, but to be transplanted, across the Atlantic into Central Europe to see this. But what was fascinating, apart from the mining engineer and the Slivovitz, was that my family, my grandfather is Slovakian.
Oh, okay.
And I, but moved to Hungary, and my mom's family came from Hungary, But when I was sitting in the hotel one night, my mom called me, and she said, you are near a town called Rushemberok, which was about 50 kilometers away. And she said, that is where her father, my grandfather, came from. And that my great grandfather was buried there. So out of nowhere, we didn't get a chance to go because the next day we're leaving, but I told the mining engineer, and he's like, should have told me. We would have gone. We would have cut half a day out of stomping around the property and stuff like that.
You can see those adits anyway. Yeah.
That to me was just, it had kind of come full circle, right? So that was a really neat adventure story, because first of all, I didn't really understand that there was a ton of mining going on in Slovakia. And to have this kind of weird link and end up in the same place that the roots of my family were from was a bit mind-boggling.
Cool.
The other one, actually, which happened in North America, is that we did at the bank a lot of work on the Windfall Lake deposit, which is now held by Osisko. And I had never been in a helicopter before, and this was about 10 years ago. So we flew to Val d'Or, and then in an effort to make the trip to the site quick and efficient, we all jumped into helicopters, and the back was my CEO and a mining analyst. I was so excited to be in the helicopter, and we all had those headphones on. I was like, da, 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 cha cha cha. Oh my god, look at this, look at you see the caribou, all this kind of stuff. And the guy and the analyst and my CEO were killing themselves laughing because I wouldn't stop talking. Yeah. And eventually, like, the pilot looked at me and he just turned off my microphone.
He muted you.
He muted me. He muted me. And I was like, blah, 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 just talking and talking and talking. But I was so, like, I remember getting to site and the geologist was in it, and I literally burst out of the helicopter and he said, "You were like a little kid." Well, the pilot muted me about 20 minutes ago.
They're fun though. Helicopters are really fun. Like, I always wanted to learn how to fly a helicopter. I've been on a lot, especially military helicopters.
Yeah, it was unbelievable. Like, I was grinning from ear to ear. And I just found a picture this week of me on that helicopter on that trip. And I was laughing because, we are blessed and fortunate because we get to travel all over the world. Yeah. Right? And we get to see things that and go to places that not a lot of people get to go to, and we have impact on these places, right? Yeah. So we have to be mindful of that because we're trying to build a better business. But the adventure stories of every single person in this business, I mean, you just sit down and talk to people and where they've gone and what they've done and the people they've met and the stories and the memories and the relationships they've built. I mean, by far this business, I wouldn't trade it for anything else, to be honest. So,
well, cheers to that. Clink glasses through the podcast, right? Well, thank you so much for coming on. It was so much fun.
Nice to see you. Thank you for having me on. It's always a thrill. You're an outstanding person in this business. You're an amazing woman. So I appreciate the opportunity to just have a chat with you.
Well, thank you. And I didn't even have to buy you a drink to get you to say that.
But you will.
But I will, absolutely. Next time.
When I get to Florida in 2021.
Right, underneath our new tiki hat. Once the tiki hat's out.
Absolutely. Amazing.
Awesome. Thank you so much.
Thanks, Emily.
So this week in our Littlest Intern section, Madeline is going to be joined by our friend Ira, and they're going to talk together about their favorite kind of rocks and what they think about rock. Are you ready? Mm-hmm. All right, Ira and Madeline, take it away.
Why are rocks hard? I don't know. What's your favorite rock? The rock I found this morning. Okay. So it was like green and it had black spots. And it was gray on the bottom. My favorite rock is a memory stone. Why did you like it? Because it erased memories. I like my rock because it was smooth on the top and flat on the bottom. How did it get smooth? I don't know. It was just right on the road. Where are you going on the road? The Caribbean.
Now, Ira, you lived on a boat for a while with your family, didn't you?
Yeah.
Yeah, Madeline loves to go on boats, don't you? Mm-hmm. What do you like to do on boats, Madeline?
I like pirate ships.
What do pirates look for?
Treasure.
What do you think's in the treasure chest?
Gold.
Ira, what would be in the treasure chest you would want to find?
An octopus.
What? Oh, that'd be pretty cool to find an octopus. Well, one of our friends that we had on the podcast, he told us about these rocks on the bottom of the ocean called a manganese nodule. Can you guys say that word?
A manganese nodule. A manganese.
Yeah, and that's a special kind of treasure that has...
What is it? Because my mom is too busy talking.
Awesome. Well, thanks for helping us tonight.
Bye.
Thank you to our guest and my good friend Miranda Werstiuk for joining us on this episode of On the Rocks. For more about Prospector, go to prospectorportal.com or check us out on Instagram at ProspectorAI and LinkedIn at Prospector Portal. Thanks again for joining us. Until next time, keep your glasses full and your ice cold. Cheers.